What up, what up, what up? What's going on, everybody? You know who it is. This is Austin, and this is the Austin Smith Real Estate Podcast, where we talk about real estate and we talk about lifestyle. Once again, we got another awesome guest that's coming to the show. Be prepared to have these gems dropped as we continue to share this sugar. And a little bit of housekeeping before we get started. If you haven't done so, definitely log on to austonsmithrealestate.com/podcast. Be sure to subscribe to one of the platforms there. And if you have benefited by listening to the show, leave me a rating and review. And let's continue to share this message. So, without further ado, let's get into the show. What's going on, everybody? Today on the show, of course, we always have an awesome guest that's gracing the platform. Today's guest coming out of NYC, the Big Apple. She is the founder of Urban Teach NYC, which is a workshop and online education company that focuses on financial education via the means of courses, workshops. She teaches it all: real estate, stocks, options, different places to invest, and that's exactly what we're going to be talking about today. Ladies and gentlemen, I'd like to introduce you to Rosalyn Ortega. Rosalyn, thank you so much for taking the time to come on the show.
Hey, thanks for having me. I appreciate the invitation.
Absolutely. No, thank you. We'll jump right into this. Tell us all, how did you get started?
Okay. I guess I should say that I am a serial learner, self-learner. So I kind of taught myself a little bit about everything. Obviously, I think I figured out early on in my 20s that having a job was not enough to kind of, make it and
Right.
successfully live comfortably, in this day and age. So I just pretty much started teaching myself. I taught myself how to first do personal taxes. So I was doing that on the side. Taught myself how to trade stocks. So I opened up a trading account with Scotch Trade. This was like early 2000. Started buying stocks, a little bit at a time, reading a lot about the market, attending some classes myself. Started doing that, and did pretty well there. So I was able to cash some money out, buy some real estate in early 2000 before the crash. And so I took it from there. And then I just figured out that, I just had so much information that I'd like to share with people. And I just figured, starting a platform to do that would be kind of the best way to help my community and also keep myself in the self-learning mode as well.
Awesome. Were you buying real estate in New York, or was that out of state?
Well, early in 2000, I was living in Miami for a couple of years.
Okay.
I'm originally from the Bronx, from New York, born and raised. But I did move down there for a couple of years. So my first property was an apartment, a condo in South Florida.
Gotcha.
And of course, once the market crashed, that changed. I ended up moving back to the New York, New Jersey area, and then continued buying real estate with my next property in 2012. So that's what I do now.
The interesting part is that this is all, or a good portion of it, at least from what you're telling us, was kind of self-taught. Of course, you attended some
Right.
classes, read some books, things like that. But the knowledge is out there, right?
Yeah.
The knowledge is all over Google. It's all over your website. It's all over what you preach. Why, what was the difference between, or if you could attribute to something, what made you take the action despite not having all the knowledge, but just a good baseline to then go ahead and start making some moves?
Well, I just figured, if you don't make a move, you really just don't learn. I mean, it's one thing to read about certain things and to learn things in a classroom setting, but there's another one to put it to practice, right? So if you just over obsess about reading the material and networking and all that, but you actually don't set a plan to get into motion, then all that information just stays stagnant. So in my eyes, I just had to do it. I just had to do it once. Go out there, buy a property, get a tenant, go through the process and the motion. And once, I'm able to do that comfortably and and it wasn't always great. I had to go through challenges at some point, but
Right, right.
you learn those things. So I just tell people you got to do it. You just got to do it. You can't sit there and wait for the right opportunity and the right time, because the right time is never going to happen. There's always going to be something holding you back from actually, jumping into action.
It always is, and there's always things that I'm looking to do next in the business, and every now and again I catch myself, going through analysis paralysis, and just I just try to, like you said, keep that forward thinking, fail forward. Like if I don't move, definitely nothing's gonna happen. So even if it's imperfect action is better than perfect planning.
Then, right,
You know, and
exactly.
you know what I mean.
Totally.
And that's
Yeah.
like the one place where I just find people get stuck at. It's like actually just doing it. I remember right before I was about to quit my job and go into real estate, I was like, okay, once I reach this amount in my savings, I'm gonna quit my job and jump right into real estate. And for whatever reason, I just kept like something just kept happening. Either my car would break
Right,
down
of
or something.
course.
So it's just like, all right, you just got to jump in, and go do it.
Yeah, totally. Yeah, and it's never going to be the right time. You're always
Never.
going to say, I want 3 months of savings. Then you're going to get nervous and you're going to say, I need 6 months of savings. And then it's just going to keep going into a whole spiral, into a circle mode, which I call it. And I just tell people, do something, make a move somewhere, even if it doesn't require, even if you can keep your job full time and just do things on the side and use your off time to make something happen.
Right.
Like Urban Teach, I started it 2 years ago. This is my second year in. My first year, it was very workshop based. So I was actually renting out spaces in different locations of Manhattan and Harlem, Brooklyn, the Bronx, and that they weren't always filled. I went on doing workshops that had only had 5 people in them, where I was putting money out of pocket.
Right.
So I still kept going. It was an investment in myself. It was an investment in my business. Year two, now my incline's more into the online learning, so which is why I developed some online classes, some online material. I have an ebook out there. So, I'm changing course as I go, but it's better than not going at all, which is what I tell people. You're not going to have all the answers from the get.
Right, and here you are now. So let's unpack Urban Teach a little bit more. Um, you mentioned you were going from location to location, holding these workshops. I do see the online presence a lot more with the webinars and the ebooks and things like that. Just talk about that really quickly. Do are you hosting these webinars weekly? Where can people sign up? Where can people get your ebook at?
Sure, yeah. So, well, I was doing the classes live. Um, every other week, I was having classes on different things like investing for beginners. I have a class that's called the top 5 markets to buy real estate within driving distance from New York City, which is one of the classes I have. Financial literacy webinars as well. But, doing them live was very tricky because a lot of folks, people's schedules are different. I was trying to really cater to just anyone and anyone that has a job, that's middle class, that's trying to learn something outside of what they learned in school. So I ended up just pre-recording the classes, and I have them on demand now on the website.
Mm.
So you can take them at any time. You don't have to take them live. And I found that to be a lot more successful because, again, you can take them on a Sunday night, on a Sunday morning, on a Tuesday night, at lunchtime during work. And I'm getting a lot of great feedback by doing it that way. So, yeah, if you go to urbanteachnyc.com, which is my website, there is a section there for webinars and the ebook as well. And again, very easy. You can just take the classes from anywhere, even from your cell phone at any time. And I'm always open to questions. So I do say that in the classes, at the end for any questions or, don't hesitate to call me, to reach out to me, to DM me. So I stay in constant contact with those folks that do take the class, which is great.
Awesome, awesome. Let's dive into diversification a little bit, only because I know this is a real estate investing platform, but we like to talk about investing, wealth building. Let's keep it going. One of the
Yes.
biggest debates is real estate versus stocks, right? It's an all-time favorite debate.
Yes.
Um, I know people that just do stocks. I know people that just do real estate. I know people that do both. And, all of them are successful. In your opinion, what's your thoughts on, diversification, being heavy on the stocks versus the real estate or vice versa? What do you kind of teach your students?
It's really a personal choice. I don't try and you know, um, I don't try and force one or the other on people, but it really depends on the person's goals. So, like, if your goal is to just have your day job, you don't want to deal with tenants, you don't want to deal with property issues, and you just want to come home and relax, but still have your money working for you, then I would say stocks would be the better option, right, for investing because there's not much work to do there besides, reading, researching, putting your money there, waiting long term, let's say, and just having kind of a strategy to what you want to do with that money, right, without having to pull it out here and there. Um, for someone that wants to be more involved and have a more tangible item that they can touch and feel, then real estate is the way to go because I feel like real estate, people are always going to need a place to live no matter what.
Right.
So that's not something that's ever going to change. It's not something that's ever going to go away. If you, in my example, owning rental properties, that is my retirement plan. Like I've gone from taking money out of my 401k to buying real estate because I'm like, okay, my 401k, it's nice, it's sitting there, it's growing. But you know what? I can do so much more with having that money at hand.
Right.
And to me, a tangible asset, something I can see and feel and touch, means a lot more than having my money sitting in an account that it changes with, the market, changes with time. And I just want to have a little more control. So I tell people it really depends on what how much work you want to put in, how much, control you want to have. So there's no wrong or right answer. It's just really based on the individual.
I totally agree with that, and that's a main reason why uh, I used to feel subconscious that having an IRA and things like that. I mean, money's put aside. I have money in stocks and things like that. But I've always considered real estate like my retirement plan. Like the way that I see it, when
Right.
I used to have a 401k, like I've done better in a year than what
Hmm.
my 401k, you know what I mean, did for me. And I just always thought that I would be able to manage the money better than anybody else manage it for me. I still consult with people and I'll still like, you know what I
Of
mean? If somebody
course.
has
Yeah.
opportunities, absolutely. But as far as what, they were offering me as far as either IRA or even a 401k, I just didn't see too much of the benefit. I mean, at that point, when I was younger, I was heavy into forex trading. So I was always trying
Right.
to invest like myself. And if I was going to trade, I was going to do it for myself. And uh,
Right.
yeah, so that's, I mean, I feel the same exact way. When it comes down to stocks, were
Yeah.
you a day trader or was this more a buy and hold and wait for the future?
Yeah. Buy and hold strategy. I tried day trading for like a quick month and it was driving me crazy. I had like anxiety and I was on
Yeah,
the
that's why I stopped
computer all day
forex.
long. Yeah, it's just it doesn't fit my lifestyle. It's just crazy. And so I just quickly turned to the more of a long-term strategy. So like for example, I'm right now looking at all of the IPOs that came out in the last 9 months. And I'm just kind of making a decision of, do I want to jump in now that they're out there and they've been out a few months? And then just, if I choose to buy them, then how long am I holding them for? How much money am I putting in there? And what am I investing that money for? Like, am I going to pull out in 2 years so that I can buy another property with my gains? Or, if it drops in the next 3 months, if the recession hits, will I be taking that money out before that? Like this, it takes a little bit of strategy. But I think right now, again, in the past it has been buy and hold, and I did good with that. Now is more of let's just keep a little bit of that for very long term and apply some of that money into real estate because real estate is kind of my main investment option right now.
Got you. The one thing that you pointed out is that you're looking at all the recent IPOs. Let's talk about your strategy if you want to unpack that a little bit. Do you have a step-by-step checklist of how you analyze stocks? Like, for example, does it start with step one, check out all the recent IPOs? Step two, narrow it down to the tech industry. I don't know if you have a particular sector that you like to focus on, or
Hmm.
break that down for us.
Yeah. So first step is who's out, what their history has been in the last 6 months. In the past, like up until 2 or 3 years ago.
Sorry to cut you off. Are these all from IPOs that you're starting this process from?
Yeah. So
Okay.
this is yeah. So my portfolio doesn't have just IPOs is that one sector that I'm just dipping
Right.
into now. I was always very nervous about buying IPO companies, so I just never did. I was always I would always just buy the more established companies, right? Like Netflix, General Motors, American Airlines,
Mm-hmm.
hotel companies. But now that we're in this whole tech boom, there's so much potential for some of these companies that are now just coming out to, get in at the right time. But it's still very scary for me because I'm like, we've seen, Uber and Lyft, come out, drop 30% a month in. So it's still very volatile. So for me, I'm just taking some of the companies that have been out at least 6 months, studying those companies, looking at, what their financials are looking like, are they reporting revenue on a quarterly basis, or are they making money? Are they losing money? And kind of like taking it from there to narrow down maybe 3 or 4 companies that I can buy and throw it into my current mix of shares that I already own.
Gotcha.
To give you an example, like Roku, right? Roku is that streaming device
Mm-hmm. Mm-hmm.
that you use for the back of your TV to replace
Yeah,
cable.
similar to Amazon Fire Stick, right? Yeah.
Yeah, the fire. Yeah, exactly. So Roku, I've been using Roku for like 3 years. I canceled cable at home. I got Roku on all of my TVs. I'm very familiar with the product. They became public. I think it was under a year ago. At like $29, $32 a share, and right now they're over $100 a share.
Mm.
And Roku is one of those products that I use. I recommend to people during my financial literacy classes. I tell people, cable is one of those areas where you can save yourself $100 a month if you went into streaming. So I talk about this stuff all the time, but I never took the time to actually consider Roku as a stock that I would buy. And that kind of, I had to kick myself and you know learn from it and say, well, there's an IPO that I could have bought, when it first came out, because
Right.
I'm familiar with the product and it's doing so well, and I missed out on the whole opportunity. So I'm just trying to develop a strategy around that. Like, okay, what are some of the companies that are going to be coming out or being public or have become public in the last 6 months that I'm very familiar with that I can jump into and buy, at this point.
Got you. I want to kind of piggyback off of that and ask this question because you mentioned you will, normally when you're looking at stocks, reviewing the income statements, things like that. Do you have a particular price point that you like the stock to actually be at before jumping in? Meaning, um, it's a lot easier, or in theory, I'll say it's a lot easier. In theory, it's a lot easier for a stock that's $20 a share to jump to 100 versus a
Hmm.
stock that's 150 and then trying to push it to 250. You know what I mean? Like there's got to be
Right.
some real force that's kind of driving that engine once you hit a certain threshold in price per share. Do you like to focus on when buying, because you mentioned buying like established companies, which at that point they might be 70, 100, $150 a share.
Right.
Are you, do you mind those, or are you mainly looking for stocks that are, say, at that 20, 30, with a lot more room for growth?
Yeah, I always stayed under the $50 range,
Okay, okay.
even with the established companies, because companies like Sprint right now, they're at $7 a share, you know.
Mm,
But Sprint used to be at 3 6 months ago, so it's doubled since they announced. I think T-Mobile was buying them or something like that, or joining with T-Mobile.
I could have sworn
Um,
that was supposed to happen for like 6 years now. Like it's
yeah. Oh, yeah. They've been talking about it forever, which
the
is why it keeps
merger.
dropping.
Yeah, I've
Yeah,
never.
yeah.
Okay, okay. So that makes sense. So that makes
Um,
sense why it
so
dropped over
there,
the years.
yeah, there are some established companies that are still under that $50 price point. I like to stay under that price range. I think once you get into the three digits, over $100, it gets tricky. Not to say that you can't make money though, because
Right.
there are still some companies that will continue to grow. But I'm just safer keeping it under that $50 range. So I'm concentrating on companies like Sprint. Groupon is another one that's like a few bucks a share.
Interesting.
Um,
I use Groupon pretty often.
yeah,
Okay.
Groupon is I think it's like $3 a share, but they've dropped. They used to be in the $12, $13 range. They've had a really tough year. But they're looking at buying oh geez, what's that review company? Yelp. They're looking at buying Yelp. So that's a merger that could possibly,
Interesting.
skyrocket them. So those are kind of things I look at, like, all right, who's priced right now at a low point but has some activity, right? That are looking to like merge or sign someone on. Like they just signed Tiffany Haddish to like promote Groupon. So then now
Right.
you have Tiffany Haddish on TV promoting Groupon. And it's no one really knows that it's only $3 a share. So why not buy 100 shares and just hold on to it? And that's a $300 investment versus buying a pair of sneakers or a handbag.
Right.
So,
Right.
but just that's kind of my strategy with that.
Do you promote other investment options besides stocks? Like, are you also doing options, bonds? I believe that you're also doing REITs as well. Um, do you promote any of those for your students as well, or what do you?
Yeah, so in my investing for beginners class, I just give folks the different options because again, it's based on their personal choice
Right.
and your tolerance level for investing. Not everybody has it in them to be a little more risky, or a lot of people just kind of want to keep it safe. So I teach about bonds and REITs and index funds and stocks and peer-to-peer lending and all these other choices of investing. But I don't do it myself. I just teach about it because it's out there. So I like folks to know what their options are based on their investment, knowledge and tolerance level again. So yeah, I do teach about it. I played around in those categories at some point, but now I'm much more savvy and I feel more confident about investing. So I don't do bonds because I know that I'm not going to sit here and just wait for a 2%
Right.
return.
Right.
That's just not my style.
No.
But for someone that's like, hey, I don't want to mess around with my money. I don't want to lose my money. I don't want to risk it. I'll do the 2 to 5%. I'm good with that. There's some people like that, and that's okay too. So I just kind of put all the options out there and let folks determine what's best for them.
You mentioned something so that I wasn't even thinking about even talking about, but you brought it up, and I'm so happy that you did. Peer to peer lending,
Yeah,
which to me is one of the easiest ways that you can really get into some passive investing. Like I feel like
yeah,
everybody's like journey, the ultimate wealth building journey is obviously route active, getting all the active money, right? And then that active money from our jobs, our careers, our business, or whatever the case, that active money that comes in then gets reinvested into things that are going to create more money, right?
hmm,
And then as that
right,
continues to happen, our time on the active side decreases while the income, right, continues to increase. And as
right.
time completely, continues to go on, at some point in time, you are strictly on the passive side, and you have the opportunity to become the bank, which I think is one of
Yeah,
the most underrated, like forms of investing, which
of course.
like it's extreme, like that's where it becomes extremely passive. And I'm not even talking about lending like being a hard money broker or an age or anything like that, because that's still active. I'm talking about here funding people's deals with your own cash, you know what I mean,
Right.
or whatever the case. but peer-to-peer lending, which there are some websites that are out there that allow you to
Hmm.
loan, 5,000 bucks over the course, I think, of the year or whatever the terms are. Um,
Right.
do you,
Yep.
anything to
So
kind
I've
of
been.
elaborate on that? Like, I think it's a great. I haven't done it yet.
Hmm.
I'm not sure. I haven't met anybody that has done it, but I just thought it was an easy way to, loan 1,000 bucks on with 10% interest or 12 or whatever the numbers are.
Right. Yeah. So that's one of the investing options for folks that, want to be more hands off and just kind of grow their money a little better than keeping it in the savings account. So there are companies like Lending Tree and Peerform and Prosper. Those are the three that I teach about. So those three companies, you can go on there, create a profile. Some of them have minimums. I think, I can't remember, Lending Trees probably like 5,000, but the other ones might just be 1,000. And you can lend out your money for a specific term. They even do 6 months. And their interest rates, they'll tell you what bucket of interest rate you qualify for. So they'll
Right.
say, invest 5,000 and you'll get 9%, or invest 10,000 and you'll get 10% over 12 months. Um, so it's a lot safer, or you'll get a lot more than just keeping it in your savings account. If it's a situation where you don't necessarily know what you're doing yet for the next year, but you want to grow your money just a bit. So peer-to-peer lending kind of works that way. And it's again, the whole thing is getting into the mode of wanting to grow your money, even if you don't want to, if you're not sure of what you're doing just yet, put it into a place that's going to give you a better return than just it sitting in a bank account. And that's what I tell folks. It's just, you start expanding your mindset once you start moving, like taking action.
I think the very interesting part is people could literally take their savings, lend it out on an 8, 9, potentially 10% interest, 6 months, year and a half, to whatever the 6 months, year, and you would potentially earn more than what your IRA could potentially bring you, which might be like what, 6, 7 ish.
For peer-to-peer.
No, yeah, like comparing that to like somebody leaving their money like in an IRA. I mean, obviously, some years might be better than
Yeah.
others, no problem. But there's almost the potential to make more, 9% of your money the first year, 18%, overall in the second year. I mean, it's definitely something that I've thought about just in the past, and this might just be a reaffirmation to go ahead and check it out.
Yeah, totally. Yeah, I mean, and that's the thing, like, and some folks might be like, hey, IRA sounds more safe to me
Mm-hmm. Mm-hmm.
because, they've been ingraining the IRA term in our heads like the last couple of decades, versus peer-to-peer lending, which is a fairly new thing. People might be
Right.
like, I don't know what that is. I'm not comfortable with that. Like, who are these people holding my money?
Right.
So,
Right.
it really depends on the person. Uh, but yeah, again, there's a lot of choices out there. It's just knowing what those choices are, knowing what's best for you, what fits your goal. If you have a year that you don't want to mess around with your money, so you're like, I just need to put it somewhere, or if you're like, I want to make my optimal return in 6 months, then buying stocks of a company that's quickly growing might be the best option. So it's really depending on the goal, right? What goals do you have
Gotcha.
with that money?
Before we go into like what's next for where you're trying to take Urban Teach, let's just talk about your real estate investing. What
Hmm.
what's your favorite type of property? What are you looking for in today's market for a solid real estate investment?
So right now, I'm actually looking at flipping my first home. So I actually live in North Jersey. My company's based in New York, but I live in Teaneck.
Ah, okay,
So
yep.
yeah, yeah. So I'm in Jersey, but so I'm looking at. I have rental properties already, which is fine. That's kind of like my passive income coming in. And right now, I'm looking at my first flip. So I am, going through the hard money lending process to get that out of the way, which is what I'm going to use. And then, start with a small one family flip is kind of my next goal. And I've already kind of have my contacts in place for construction. Danny, of course, Danny, that's my boy. So he's
Yeah.
gonna be helping me with that. Yeah. And on the other side of it, I just want to try it. I want to try it once. A lot of people say flipping is no joke, and I believe that it's a lot of work. You have to have a lot of connections, and things don't always turn out the way you plan them. But I want to learn. So I'm like, you know what? I'm gonna do it. I'm gonna do one, see how it goes, and then from there I can decide: do I go back to buying rentals, or do I go and change course and go into flipping mode? So that's kind of where I'm at right now.
I got you. And shout out to Danny Gonzalez. I don't remember which episode he was on, but yeah, go check that episode. We talk about managing contractors, how to, keep them on top of their A game, because obviously time is money. And
Yeah,
with them killing your project, it puts a burn in your pocket, and that's a big no no. So forget that.
absolutely. Yeah,
The
exactly.
Me and my partner are kind of on the same tip. We love um, just the multifamily game, and
Yeah.
we're just trying to figure out. Well, my wife is my partner on the rental side of it, and then my other partner is more into flips and things like that. So
Okay.
uh, the multifamily is my favorite. That is my go-to.
Yeah, that's
That
that's
is
what
my
I have
favorite.
too.
I love
Yeah.
it. As of recording today on the 30th, I don't know yet when this episode will be released, but tomorrow's the first, and everybody knows what that
Rent
means.
day.
So,
Rent day. Yes.
right? So that is my particular favorite strategy. Last question: are you looking? Well, you mentioned that you're in North Jersey now. Are you buying property in your area, or are you going out of state to do so?
I'm buying in Jersey for the most part.
Okay.
So I'm building my portfolio here because I'm here and I like to keep it within, driving distance that I can
Yep.
get to. I've heard of so many cases of folks buying outside of the state. It's not terrible as long as you can get to it, which is the problem. So I won't invest anywhere where I have to jump on a plane to get to. Not at this point.
Mm-hmm.
Not to say it won't change in the future, but for now I'm really just trying to build my portfolio, in the area that I can get to in case of emergency and things like that. But there are other markets that are, there's a lot of good opportunities. Of course, there's Detroit, which is up and coming. There's areas in Florida that are really up and coming right now. Of course, Atlanta, Georgia, that whole area is pretty great. But for anyone that's investing for the first time, I usually don't recommend that. And I tell people if it's your first time investing into rentals or property, keep it where you can get to it. Because again, you need to keep it as controlled and as safe as possible. And if you can't get to it, jumping in your car, then that could be a problem.
Right, right. No, totally agree. Just get your feet wet first. Something that is around the corner, or even if you decide to live in it. Find out what it's like managing tenants, what the process is like.
Exactly.
You know what I mean? Because
Yes.
everything that you're gonna have to do, you're gonna have to be able to. If it's far away, you're gonna have to be able to put the systems in place in order to do that for you, and you'll only be able to do that when you've done it yourself. Or two,
Right.
hire a property management company, which at that point, now you're taking 100, 200, $300 from
Right.
your
Yeah.
profit, which you know what I mean can just eat up into your profit. Now there are ways to manage it from afar, but again, I feel like that experience will come after you've managed a few coming from your backyard, and then now because now I feel like all I would need is just a handyman connect and
Right.
a security camera. That's it. I don't even have to
Yeah.
pay for
Yeah.
property
Totally.
management. You know what I mean? But it's only because I have
Absolutely. But
the
you have experience, so you have
right,
experience, so you can do it. Yeah.
right, and it makes it a lot easier. But all that to say, that can definitely be done. Okay, so what is next for Urban Teach? Are is the goal is just building and expanding, or are you taking it any new ways? What's next?
So yeah, so the next wave is to develop additional courses, additional on-demand courses on the website. So I have to extend my curriculum. I'm going to be partnering up with some folks that are teaching classes already online and kind of having them be featured presenters on my website.
Mm,
So I'm working on that now, and some folks that are pretty well known to us in our field that are currently on Instagram and have up and running businesses. So that's what I'm doing now. It's kind of just building those connections, developing a curriculum, and then hopefully later in the winter having my first wealth building events in New York, most likely in Harlem.
beautiful, beautiful. Awesome. As we start our descent here, as we get into the core four, which are the four questions that I ask each and every guest on the
Yeah.
Austin Smith Real Estate Podcast. Question number one: what is your favorite aspect about financial literacy? And not so much just like the wealth building, but what obviously that's the fun part. But what's your favorite aspect?
Favorite, I would say, is uh, helping someone get organized with their money. So, you know, a lot of us, or most of us, were not taught in school how to financial plan our,
Right.
our income. So when I get to meet someone that needs that help, and I get to show them ways of budgeting their money, saving their money, setting up systems so that they can have a little more cash left over that they can then invest. That makes me really happy. That's like my favorite part of that when it comes to financial literacy.
Awesome. Question number two: what is your favorite business or personal development book?
Book, 4 Hour Work Week is my favorite.
Okay, Tim Ferriss. I
Yeah,
think that
that
might be
one.
the first one on the podcast, possibly. Okay,
Tim,
awesome.
yeah, by Tim Ferriss. And I read it twice, and I've heard it on audiobook once. And every time I read it or hear it, I learn new things. And again, this book is specific for anyone that has a full-time job, that has a side gig, that needs to organize and prioritize their time. And it's just so golden. It's amazing. I always tell people to read it.
Awesome, awesome. Question number three: when you're not helping people get their finances to the next level, helping them invest in real estate, stocks, REITs, options, all the head caboodle, what are some of the fun things that you like to do in your spare time?
I don't have a lot of spare time. I have two kids,
I got you.
but hanging out with them, of
That
course,
is your
would be
spare
my
time.
number one. Yeah, so hanging out with them is two. I have two girls, 3 and 11. So doing girly things, taking them to the mall, doing our nails. And then when we don't have our kids around, and my partner and I like to go out, have a few drinks, visit, something new in New York that we haven't seen yet, since
Yes.
New York City is always changing. Yeah, so that's pretty much it. We try to keep it very well balanced, so it's not always all business.
No,
You have to have that balance.
absolutely.
Yeah.
No, awesome, awesome. Last but certainly not least, Rosa, where can people find you at?
Definitely on Instagram. I'm always on. So Urban Teach NYC is the name of the page, and then for any other extended information or services, you can go right on the website. So urbanteachnyc.com. I have a calendar on there. People can reserve 15-minute consultations for free if they want to talk to me about how to help them, get financial planning in order, or how to set up an investment account, or even getting set up for, a plan to buy real estate. I have the webinars on there, the ebook. So it's the best place to kind of go and get the full scope of the business.
Awesome, awesome. Rosa, thank you so much for taking the time to come on the show. I know I personally just got a little bit of insight on just how I can handle some of my stock buying in the future. Um,
Good.
Considering the fact that that is the one reason why I will continue and probably will never switch ties when it comes to stocks versus real estate, only because, and I tell it all the time, no matter the stock or whatever the case, or no matter who speaks, but I find it so challenging to hold something of ownership, this stock, And then if the current individual in office as the president said something
Hmm.
stupid, then my value drops. If
Right. Right.
somebody, accidentally said something wrong, like the value drops.
Right.
Whereas my rent is the exact same, and if I wanted
Yep.
to, I can increase it, I can decrease it, I can do it. I got some flexibility with it. Um,
And rent hardly ever goes on sale. I tell people rent never drops. I haven't
there
dropped my
is no
rent
sell.
ever.
There is no sell, and the way that I see it, the human population is doing nothing but going up. So
Right.
somebody's gonna have to
And we
find this
all need
place
a
to
place
live.
to live. Yes.
Absolutely. Thank you so much for taking the time to come on the show. There were definitely some
Thank
gems
you.
dropped. I'm pretty sure the listeners got a lot of gold to listen to and a lot of gold to implement. So thank you so much for that.
Thank you for having me. And again, you're doing awesome with the podcast. I'll make sure to let everyone I know to listen in. And yeah, thank you for reaching out. I
It's
enjoyed the conversation very much.
it's gonna be awesome. Thank you so much for that, Rosa.
All right. Talk to you soon.
Alrighty.
All right. Bye bye.